Welcome back, ladies and gentlemen, to one of our more recent weekly reviews. Today we're going to be taking a look at a little bit of the dollar index as well as some Nasdaq. Just some thoughts for the upcoming week and what to expect. First things first, let's take a look at our calendar. This week, I think, we've got non-farm payrolls coming up. I know it's labeled as non-farm employment change. We've got NFP coming up. Apart from that, we have couple other high-impact news events as well. Everything before Friday is really not much to worry about, although during this week, however, we like to get out before Wednesday. And we don't really like to overextend ourselves and hold positions. So, jumping straight into it, if we can take a look at what I have on the screen, is we've got this daily chart. These are some schematics which they might look familiar. I think that they are up on the YouTube channel in some of my previous videos, or they've been posted to private mentorship. If you're watching from there, you know exactly what I'm talking about. If you've seen them before, you do. But it's plain and simple. So we've got this defined range from our internal range I to these relatively equal lows which were highlighted, to our internal range low as it's marked out. It's also marked as external sell side liquidity relative to the range. We've been working with this range since early on this year. I think the entire year we've had this range. And what I was expecting initially, which is why I've got this fair value gap marked out here, is that we'd find support at this area initially and then rally higher to sweep our range high. Because the order flow prior to us actually forming the low that we have in here was indeed bullish up until we swept the low below here. Notice how we trade into the 50% or the consequent encroachment of this range. This is, I think, a weekly or monthly order block that we're trading into and finding support off of that. So we violated the range. We swept the internal range low, which is this low in here. Swept the internal range low, or the relatively equal lows, and we've seen an impulse move away from that area. And initially, the target that I had was the weekly breaker block, which has been highlighted by this blue extension, as well as the 50% or consequent encroachment of a monthly wick, if I'm not mistaken. Let's just take a look. Yeah, it's the monthly wick. So the 50% of that wick right there, the consequent encroachment, that would have been a valid reactionary zone. But what we've got here is we've got the inverted fair value gap over there. It's not delineated, it's not highlighted, but it is there on the screen. And okay, let's not get too much into that. We've got the inverted over here. What I'm specifically taking a look at is how we've swept the lows in there. The external relative to the range, but actually internal lows. If we're looking at the overall range which we're operating, which is from the range high to the range low in here, we've swept the internal liquidity. And if we know anything about how liquidity is generated, it is a fact that we need to move from either internal liquidity and then seek external liquidity, or we need to move from external liquidity and seek internal liquidity, which was the idea behind the weekly breaker block and the consequent encroachment being the drawn liquidity. How that looks like in schematic form is just, if you look at how the market forms its peak highs and peak lows, is we'll be doing this. We'll have our defined range, that being the range high and this being the range low, and then any sort of retracement back into this counts as a run on internal liquidity because it's internal relative to the range, right? We'll have our run on internal liquidity, And then after we have had that run on internal liquidity, we'll seek external liquidity. So either being the range high or the range low, and we'll violate that, right? And after that is sought, we'll seek some sort of internal liquidity relative to the new range which is being created, which being this low and this high will be inside of that range, right? It's how the market generates liquidity. So the idea and thought process behind this being the drawn liquidity was simply a run on internal liquidity or run on external liquidity relative to the range that you're looking at. We've got two ranges on screen, the internal range high and the internal range low, as well as the external range high and the external range low. Up until this point, I was expecting DXY to be bullish. Noticing how we violated through that, we do have, I think this is a new week opening gap on the screen. If I'm not mistaken, I think it's a new week opening gap. We've got that on the screen. Notice how we form support at that level, at an area which should otherwise be considered bearish, or we should see a bearish reaction. We just rally through that, right? So now we've closed above this area, and the only targets that I'm looking at currently, because the only targets that I'm looking at right now, short term, are, let's see, it's this. Let me get rid of these. We've got the buy side liquidity over here, which is the internal buy side liquidity. And then we've got these highs in here. I want to pay attention this week specifically to how price reacts when it retraces back into this range, whether it can actually do that. It should actually form a reaction above the 50% of the fair value gap in here. We've already had that reaction in the lower portion. We've got this down close candle already in here, reacting off of that 50%. This candle closes above that afterwards. And then any sort of retracement back down into this range, you generally want to see it react in the upper two quadrants. So the 50% and the 75% quadrant. Any retracement down into this range, into the down close candle in here, which we look at as the bullish order block, should be seen as buying opportunity, just from my perspective. That's about it for DXY. I do think that this upcoming week we will be bullish. I don't really expect us to see any bearish price action anytime soon per se. Any sort of bearish price action should just be a retracement of some sort, looking for some sort of inefficiency. We can allow for it to come back down into this lower portion of the range if we're working with what we currently have, and we use this as the range high. Anything at or below 50%, could be a draw on liquidity. We do have a little gap in price action here with the inverted as well as the normal fair value gap in there. Just something to note. That's about it for DXY for this week. I'm really just expecting a slight retracement down into the order block over here. If we can get a reaction off of there, we could seek the highs in here, the inefficiency in here, and eventually the internal range high, which I think is what we're after. Just a few thoughts. Moving on to NASDAQ. Let's take a look at NASDAQ. Okay, for NASDAQ, we've seen quite a bit of bullish price action. This is the futures market, by the way, so this might not look exactly like your charts, such as US 100, but it's practically the same thing, just with a little bit more information. From this point down below here, so from September of this year, we've just seen bullish price action, right? We've had a run on external liquidity down here, down below the opening price of that candle in here. Better run on that. We've had us close above that, as well as trade back down into this range, this 3 candle range, which is viewed as a weekly order block. We've seen us react off of the daily order block in here. If you take a fib and you extend that out there, you'll see that we react off of the mean threshold of that, which is the 50%. And then everything since then, all the price action since then has been somewhat bullish. We haven't seen any major retracements. We've kind of been gravitating towards higher prices or seeking higher prices. What we have in here, what I can see is we've got the sell side imbalance, buy side inefficiency. So the fair value gap in here. Again, it's not annotated, but for the purpose of the lesson, I guess I'll put it on. Purpose of the review, we've got that imbalance in there, which we can see we're kind of consolidating in and not really seeing any sort of resistance forming from that. We've got the imbalance in there. We have got the external range buy side liquidity. We have got the daily bearish order block in here, as well as the new day, new week opening gap in here. Let's see, Friday, July, Monday, yeah, new week opening gap. So you've got all of these premium arrays highlighted, which have not been tapped into, whilst we're hovering inside of a premium array, which in actual fact, if you take a look at the range which we're working in, if I can get the fib, in actual fact, relative to the range that we're working in, we are in deep premium. So any sort of consolidation in deep premium is seen as it shouldn't be lackluster. You know, if we're in deep premium, we should see immediate impulse. You know, some sort of impulse move that moves us away from there. But we're not seeing that at all. So we've got the new week opening gap, daily order block, external buy side liquidity, all as possible draws on liquidity. And then we've marked out all of our bullish PD arrays, which are being respected. And that's really one of the first things that I pay attention to. Are our bullish PD arrays, what is the narrative behind price? What is price trying to tell us? Are bullish PD arrays being respected? Is there an opportunity for us to seek higher prices? Right? And from what we can see is we do have our bullish PD arrays being respected. There's no sort of one thing to pay attention to is, are we running important highs or lows? If we're expecting prices to go higher, which lows have we run? Right? Where have we formed our low? Right? This down here is an important low that has been swept. Right? This is what I would view on a yearly time frame as a run on stops or run on liquidity. Apart from that, we haven't seen us targeting any sort of important lows whatsoever. These two in here are relatively equal, not really, but somewhat equal. Again, another opportunity for us to run these lows, but it fails, you know. So we're not targeting any sort of low. For the most part, we've been gravitating towards higher prices. We're seeing our premium arrays being disrespected, such as the fair value gap or the SIBI in here. Really, Nasdaq is leaning towards higher prices from what I can see. Now, if we're zooming in and we're taking a closer look at what we have going on in here, we've got the daily order block, daily bullish order block annotated over here, which is that lowest down close candle in this range, the one that closed the lowest. Got that annotated there. We have got the potential daily order block also annotated over here, and the 50% of that marked out. I've also marked out an internal range sell side liquidity point and a run on sell side liquidity, an existing run on sell side liquidity, as well as our internal range buy side liquidity, which is the range in which we're operating for this upcoming week relative to the lower time frame. And then I've marked out the previous daily high, which is in line with that internal range buy side liquidity, right? So those are our PD arrays that we're looking at on the daily time frame, and then taking that down or transposing that to the 4 hour. What we can see going on here is that previous daily low lines up perfectly with the mean threshold of the daily order block, as we can see. Right, we've got it marked out from 20,520 all the way down to 20,220. That is our range on the order block. Any sort of bullish reversal found inside of this range should be taken seriously. Then we have got our run and stops marked out as well as our internal range sell side liquidity. And just taking a look at that on the lower time frame, paying attention to where our candle bodies have closed. So we have the run on this. If I can, let's do this. Let's get rid of these, and then let's pay attention to this. Right. So we have the run on this eye, which is looked at as a run on liquidity because we stab into the eye and then we trade away from it quite swiftly. We have the run on these internal eyes as well, these relatively equal internal eyes, the run on those. And then we have us gravitating towards a 4-hour order block, which is in here, which hasn't really been reacted off of. If you look at these candles which have tapped into it, they haven't left that range before they tap into that. So any sort of retracement back down into this range could be considered as a bullish reversal, depending on whether the signs are there on the lower time frame. We've got this run on stops below here, and we have us, more importantly, closing above this high in here, right? We have us closing above this high, which is very important if we're paying attention to the narrative that price is displaying for us. If this were to be a complete reversal and something where we'd lean towards us taking out this low, I'd really want to see us wick above these highs and sort of not close below it, right? So what I've marked out here, and what you can see is I've marked out the sell side imbalance over here, sell side imbalance, buy side inefficiency, and then we've graded it in intervals of 25. So starting from 0 all the way up to 100, 4 quarters of 25 each. And what these are is these are our quadrants. Usually when you're looking for price to be bearish and you have, let's say, a fair value gap, we'll do this and we'll imagine that this is a fair value gap. If you grade that fair value gap, what you generally want to see is if we're expecting price to do something like such, let's use this, expecting price to trade up into it and then reverse. What you usually want to see is you want to see price reversing at that 50% or below it. So at the 50% or below. Anything higher could sort of be viewed as a false run or a weak fair value gap per se, right? Because once you're closing above 50% into the 75% quadrant, what'll usually tend to happen is you'll see us come back down. Let's try and clear this stuff. You'll see us trade into it, close above it, come back down, fail to take out the low in here, and then just continue trading higher, right? That's not what we want to see at all. If you pay attention, if I can just get this to delete. If you pay attention to what we have going on in here, notice how when we form this peak in here, this is where price starts reacting. We're closing above that 50% line, which is marked by that. We're closing above that 50% line. We're still seeing a retracement, right? But it's not a retracement for a reversal. Even though we still close inside of the fair value gap, we wick out of it, which is usually allowed. You wick out of it, we trade it into the low of this candle in here, which could be viewed as some sort of breaker, or these two up candles could be viewed as an order block range that we trade into. I am confident that there are some traders in the world who looked at this as a reversal. But the fair value gap is the most telling sign. Once you close above that 50% level, this is consequent encroachment. This should be the most highly reactive point in this range, starting from the fair value gap. premium point to fair value gap discount, right? That should be the most highly reactive point in that range. And if you're not seeing a reaction form there and you're seeing us disrespect it and close above it, it all relates back to narrative. What is price trying to tell us? This is a premium array relative to this range, or could even be sitting at equilibrium, perhaps. Okay, that's equilibrium. Anything above equilibrium, if you're familiar with the PD matrix, anything above equilibrium is viewed as premium. So we're finding that reaction in premium, right? And we're closing above this premium array, right? Above the 50% of that premium array, which is the most highly reactive point in the range. And if we're thinking in terms of narrative, all right, our premium array is not being respected. It's most likely that we're not going to see the reversal that everyone is anticipating. Okay, just something for the notes. But what happens is we now disrespect that completely, right? And once we close outside of that array, any sort of retracement back down into that array should now be viewed as the inverse. So initially this was a premium array, right? We had us reacting in here, closing above the consequent encroachment of it, and then trading outside of it, so violating our premium array. Now, any sort of retracement back down into it, it's no longer viewed as a premium array, but as a discount array, right? Relative to our new range, because we've created a new range. Once we've swept this high in here, right, or these highs in here, once we've closed above these highs in here, we now look at the new range which we formed. We've had our stop run, which took place over here. So a run on sell stops, right? An internal run on sell stops. If you're looking at from this low to that high, it's an internal run on sell stops. And then we have a run on external liquidity. All that we now really need is a run on internal liquidity, right? And the range which we're working with is from our origin of our stop run, or where our stop run began, which is from this low in here. And we're just marking out the new high that formed. Anything at or slightly below 50% should be viewed as the area most likely to be drawn to, right? Fortunately, market just opened up. I think we opened up on a bull gap. We can talk about that tomorrow. So our premium array, right? If we're thinking in terms of PD matrix, above 50% is premium, below 50% is discount. Our premium array is now sitting not above 50%, but below. So now we look at it as a discount array. And then we've got the order block, which lines up in here. And we're paying attention to the narrative, also what is taking place below, where we react off of this little volume imbalance in here. Just a little bit of confluence to add to the fact that, you know, we might be seeking, or we might be seeing bullish price action upcoming. But yeah, that is about it for Nasdaq. I don't really have many other thoughts, just a little lesson on fair value gaps and how to use them, as well as some thoughts. As for higher prices, we'll be working off of those daily PD arrays. If I can give you guys those again, the internal range buy side liquidity being the first one, the new week opening gap being the second one, the daily order block in here being our third run, and then eventually, if we can make it through all of these PD arrays, targeting that external range buy side liquidity. So 21,240 from 20,558, which is not a crazy run for Nasdaq. It can do that within 1 week, especially considering the fact that we have NFP coming up this week. It's highly possible. But anyway, thanks for tuning in. Hopefully this was insightful. Hopefully you managed to take something away from this. Until next time.